The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes. Thanks so much for joining me. Hopefully everybody out there had a fantastic holiday weekend, extended weekend. Maybe some of you are still on vacation, and if so, be safe out there. Have a great time, relax a little bit, and join us here at TFNN each day. In fact, you can always give us a call. We'd love to hear from you. Our call-in number is 877-927-6648. Market's relatively quiet out here today. Right now, the Dow is up 23 points, trading out at 13,162. The S&P is up 1 point, trading out at 1427. Composite up 4 points. Transport's down 88 cents. The NDX is up $3. So expect a relatively quiet set of trading sessions today, tomorrow, and Friday out there. The fireworks may be starting when we come back from the new year next Wednesday out there. As we take a look at these markets, let's start off by taking a look at gold. Now, you can always catch the archive of this show on Channel 10 if you're not watching us live on Tiger TV. Many folks listen to us on using the TFNN.mobi, maybe a radio station out there. And if so, and you'd like to take a look at the charts and follow along with us, you can always do that on Channel 10. Of course, we do stream live on mobile devices out there, so you can just go over to the homepage at TFNN.com. Over on the right-hand side, you will see a button over there that will allow you to click on it and stream live to your device. Maybe it's something new that Santa brought to you, and you can watch TFNN.com and take a look at the charts. And if you're watching us on Tiger TV, I'll just wave to you right now. So as we take a look at gold here, gold right now trading up $6.30. That's up about 0.4%, out at $16.65. Let's take a look at some of the chart patterns that are out here. This way you can draw these chart patterns on your chart as well. Some of you might just simply try to follow gold using the GLD ETF. We're taking a look at the continuous contract out here. Now, what you'll see is you'll see two lines. Well, you'll see really a set of 4 lines out here. I'll describe to you what these are so that you can draw these in on your charts. Number one, you'll see this red diagonal line. This is coming off of the high in gold, September the 6th out there. That high was $1,923.70. That's when the high was put in, even with all of the different QEs that we've had out there. Then what you're taking a look at is you're taking a look at the next set of swing points, or the next high, being the February 29th time frame. February 29th, you had gold trade up to $17.92 and a little bit of change. That line there, folks, that is what we call a descending, trending tops line. And what gold did was gold broke out of it. It broke out of it on the trading session of August the 23rd out there. In fact, broke out of it, came back and tested it. When you break a trend line, often, I will say high probability, and that high probability being over 80%, the price will come back and test that area. In fact, it tested it on 3 trading sessions, being the August 30th, August 29th, 30th, and 31st. The 31st giving you a signal that it no longer wanted to do the test, because that was a really nice candle-wide price spread on that day, and had some pretty decent volume as well. Now what we see here, now what you also see along the tops here, this black horizontal line, that is a clear area of resistance. Each time gold gets up into the highs of around $17.92, it gets pushed back. Now, those are the two. That's the diagonal line and the horizontal line. The squiggly lines, if we will, that is nothing more than exponential moving averages. That's a 20-day and a 50-day. The blue line is the 20-day. The red line is the 50-day. Bullish, folks, and this is a daily chart out here, but a bullish signal would be when the 20-day would be above the 50-day. That would be the blue line, would it be above the red line. And if you take a look at it right now, where is it? I'm going to blow this up on the chart. You can see that the 20-day crossed back through to the downside. It looks like it did it on December the 7th out there. So it crossed, and that is not a bullish sign. You watch me take the chart back here. As long as a 20-day. Now these are lagging indicators. So I'm showing you something that's a lagging indicator. We'll go ahead and we'll draw an A to B equals CD patterns. We'll take a look at relative strength or relative weakness out there. So show you times when you should be considering buying, or when you should be considering selling. Maybe you don't short a stock, but you just simply realize when something is in an overbought condition, and maybe if you're looking to buy it, you wait for it to just simply pull back to you. Much like maybe some of you out there for your holiday shopping. You know, I heard rumors were that holiday shopping wasn't that strong out here, and so looks like there's going to be a lot of folks out there, you know, waiting for the market to pull back, waiting for the retail stores to pull back, because they're going to want to dump their inventory. So I'm sure there's going to be a lot of great deals out there. Not a lot of great deals when it comes to those companies and trying to make profits, but certainly they want to go ahead and convert inventory to cash. If you've ever owned a business, folks, you don't want to be sitting on old inventory, because, folks, it gets gets worth less and less each day. So now as we take a look at the 20-day and the 50-day, we continue to take a look at it as gold was breaking out here back in the August 2012 time frame. You had the 20-day cross through to the upside of the 50-day. That was a bullish signal. You can apply these. We use exponential moving averages. They're more weighted as opposed to a simple moving average out here. And what we can see here right now, we can see both of them turn down. We can see price kind of widening versus narrowing. That, folks, is not a bullish sign out here. If we take a look at A to B equals CD patterns, that's one pattern that we'll go ahead and draw in here. That A point being the swing point, that's where we saw a change in trend. That was on October 5th. That high was 1798. I say change in trend because you can see price moving down. So you're going to start with your A point being 1798.10. That's your A. Your B point happens to be the low of November 5th. Trading below that swing point of November 5th, that also is not a bullish sign out here. That's your B point. Your C point is a retracement. Probably was about, looks like probably about a 50% retracement. But you'll see 1-to-1. A to B equals CD. That would take you down in the 1629.50 level. Swing points, they're key. The swing point from November 5th had about 223,000 contracts out there. As price moved below it, was moving below it with lighter volume, 93,000 contracts. You had 157,000, however, on the 20th of December. So this sets up here that gold will likely, now what you can also see on the bottom of my screen, you're taking a look at, well, you got two things. You see volume, that's the very bottom. Those are the bars that you're looking at. You're also taking a look at that relative strength indicator, and each time gold gets down, or any equity that you trade gets down into the 30% or lower, you get down into 20%, you start getting into extreme territory. 30% just a normal area where you start to move into an area where there's some relief. In this case here, you know, you're taking a look at some relief. If you take a look at, that was the low that was put in here on November 5th out here in gold, getting into that oversold area. The way that you work that out, you either bounce up higher or you just simply move sideways. What is key about taking a look at gold here right now? Number one, I would say that it's trading below the November 5th B point. So you don't have a complex A to B equals CD right now. Also trading inside the swing point, inside the body of the swing point from December 20th out there. Gold most likely wants to do more than a 1-to-1 A to B equals CD down. You got the lagging indicators, you've got the leading indicators suggesting that. Now, if we go take a look at retracements, let's go ahead and put this all together. Let's look at retracements off of the swing point low. That would be the May 16th time frame. That is the 1526.70. So if we go from that low all the way up to the high that was put in here on October the 5th out there, what you will see is price also where the 1-to-1 A to B equals CD. That also happens to be a sweet 618 retracement level. So that is an area which I didn't get right down to it, but it got close enough, folks. You know, the actual number was about, 1629, and what gold actually got down to was 1636. That is close enough on a $1,600 price-pointed product that you would be trading out there. So you've got an area where you would expect to see some support, because you're at a 1-to-1 A to B equals CD, you're at a 0.618 retracement, and then if you take a look at the relative strength indicator, you're getting down to a level of 26. 26, I said when you get to 30, you start to get cautious. You know, if you're short, you start to really tighten up your stop out there. It of course depends on what your time frame is that you're trading. Your expectation should be that because you've got really a convergence of three activities or three areas of strong support, I should say. I don't know why I said activities, but I did. So if you take a look at those areas, you should expect a bounce. You should expect to work off that digestion. Maybe some of you still working off the digestion from yesterday, or maybe it was just simply a weekend of splurging out there. Yours truly also probably ate a little bit too much spinach dip, although it was good. Maybe a little bit too much honey baked ham, although that was good too. And maybe a little bit too much turkey last night as well. And maybe too much shrimp and maybe too much pie. No, you can never have too much pie, can you? Actually, you can. So, in this case here, you can see that it's really not showing any kind of bullish sign out here. Nothing more than just a normal bounce. I think gold is really going to come down and visit the 0.786 level, do more like a 1 to 1.272, A to B equals CD down. 1580-ish would be your range, and if volume starts coming out of this thing, in fact, that's what you really want to see. The bulls, if you want to be bullish on gold, you'd like to see a couple of big trading sessions with big volume to the downside. That's when you'll scare all the buyers out, and that's when you will want to be a buyer out there. If we go take a look at silver, you've got silver trading up 14 ticks right now. Silver really also giving you, quite frankly, giving you a more bearish sign out here. Now, silver took a little bit longer before the 20-day crossed through that 50-day. That occurred as we saw a nice little wide-ranging bar on December the 20th. If you take a look at silver here, as it also got into this extreme oversold condition, you can still see it's below that 30 level. Silver has decided in order to work off its condition, just simply going to sit on the sofa and let it digest itself. You've got some small bodies out here. Now, those small bodied candles, they are saying that it's lost its strength to the downside. However, when it loses its strength to the downside and you're in oversold territory, you're expecting that. You're also seeing a 1-to-1, A to B equals CD. Silver will be moving lower as well, probably into that $28 range. That'll be a 1 to 1.272, A to B equals CD, and a 0.786 retracement. Well, what's that all about? Probably all about the king dollar right now. You got the king back 20 ticks. Let's go take a look at the currency marketplace out here. Let's start with the Japanese yen. You've got the yen, US dollar, or US dollar Japanese yen. That is the currency pair side that I take a look at it. You can see 85.31 is where it's trading at. It's trading into the swing point here that was set on April 8th, 2011. So doing the 100% move of a move, that is 85.51. Key here, last week you had the yen as we closed out the week, still trading below that black horizontal line. That is an area of tested resistance out here. The question is the yen going to go ahead and break out of that? And if the yen breaks above the level of 85.51, that, folks, will be very, very strong. That really sets up the next time that you will see any resistance on the U.S. dollar Japanese currency pair is going to be the May 2010, May 7th, 2010 swing point. That low is 88 bucks. The high out there, 94.97. Stay tuned Friday. We'll see if this area here gets rejected. You can see the yen getting into overbought territory, also making an A to B equals CD up. Pretty close to completing that. It has just a little bit further to go as I put that on my screen, so we can see a couple patterns that are completing here at the same time. Dow is up 17, S&P flat at down 19 cents. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow up 17 points right now. Everything else just slightly red out there. Of course, Apple is struggling, leading the market down here, off $4 and change out at 515.87. Let's go take a look at the euro here. That's what we've got up on our screen. The euro here coming into an area of resistance. Has been tested a couple times. We're looking at the swing point on the euro that goes back to May 1st, 2012. That high, 132.830. Out here. We got some bearish candles. You saw the first one that took place on December 19th. You got that little gravestone doji candle out there. The bulls lost the battle, no question, all over the battlefield. You got on the next day the candle that you got out there. That's a high wave candle out there. That is looks like a bullish engulfing, but it's not. There was no move to the downside. That just meant that the euro had lost its way on the way up. You got a little bearish engulfing candle on the next trading session. That is on December the 21st. You then get what looks like another gravestone doji here on December 24th, and today we'll see where the euro closes out. I suspect the euro running into some resistance in this area. We'll see the euro in fact pulls all the way back towards the session lows around the 131.7 level. That will put some real pressure on the markets as well. Again, as I mentioned, maybe you didn't catch the first hour of the show, but on Monday's trading session, on Christmas Eve. Certainly the Mary Cliffmas was delivering coal out there. Got reversal signals in the New York Stock Exchange. That is the biggie out there. So that was the first signal out there. The S&P 500 as well. That was indicating it wants lower price. Now, in the first segment of this show here, I do expect that what we will see is a relatively, mild move over the course of the next couple of days out here. At least that's what the pattern of the past is. But reversal signals nonetheless coming in on Monday out there. So be careful, beware. Those reversal signals are out there. So on the currency market, the euro here just trying to make a stab. If we go down to a 30-minute chart, maybe we'll see some other patterns out here that the euro is completed. Let's see if I've got that 30-minute chart here handy on the euro. Yeah, we do. Let's go take a look at it. So you can see the euro again. I just pull these charts up and we just look at them, and it's time and time and time and time again. Take a look at the euro as it has this nice move here during that 10 o'clock session. That's a nice move. Of course, as it does that, it does what? It gets where? It gets up into the overbought condition. Now what's it doing? It's working its way off. Of course, here, that move up, the relative strength on the, let's go ahead and put this up here on the chart here. The last time that the euro was moving up into these areas here, that relative strength was up at the 74 level. This time only making it up to 72. Sounds to me like a little Stevie divergence out there in the euro on the 30-minute chart. If we take a look at A to B equals CD patterns, it doesn't look like it completed it, but let's go draw it in here. Your A point on the 30-minute chart at 12:30 in the afternoon on December 21st, 131.575. Your B point was up at 6:30 in the morning, out at 132.324. Pulls back. I take that back. It did make an A to B equals CD out there. You got to love those patterns, folks. You got to love those patterns. So there is actually a little bit of divergence in the markets here. You can see the euro pulling back a bit. You can see it also putting some pressure on the market. So you may not trade currencies. You don't need to trade them. You just want to be able to go ahead. You got and to currency pairs, they're almost for free as far as the data feed on it on almost everybody's chart platforms that are out there. And if not, you can use a chart platform that is out there, and it's helpful to understand what's going on inside the currency market if you're trading it, especially if you trade intraday. If you trade intraday, you really need to do this and need to understand the patterns that complete out there in the marketplace. Let's go take a look at some of these stocks here that are moving and grooving this morning. Let's go take a look at Herbalife. HLF, that is the equity here that's been pounded because Bill Ackman says he has taken a short position out here. So let's go see if they're trying to squeeze him this morning. Not much of a squeeze job going on out here, but let's go take a look at Herbalife and see what the stock chart was telling us early on. It was not to Bill Ackman that was giving the signal of weakness here. Just come back and take a look at May 1st, 2012 on this stock chart. That, folks, is volume off of the highs. You do not want to see that if you are long the stock, that's for sure. The equity back, let's see, made a high, made a bearish engulfing. So your first signal here that you were in trouble was on April 24th, 2012. The trading session before that gets up to a price point of 72.68. Wait a minute, is that right? No, $73. That's one of Basil's round number highs out there. How about that? I wonder if Basil had this on his list here, round number high for Herbalife. You can find out. Basil's going to be up next, not right next, but in 30 minutes. And as we do on Wednesdays, we got Basil Chapman from 11 to 12, Larry Pesavento 12 to 1, Daryl Martin, David White, Ken Shreve, and the Tom O'Brien Show from 4 to 6. Dow's up 14 points. Everything else just slightly red. We'll be right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Before we went to break, we were taking a look at Herbalife. Ticker symbol there is HLF. And so, you get the media here reporting that, because of the short position that Bill Ackerman is taking, that's what was driving the price lower. But nothing could actually be further than the truth. Not that his taking a short position and coming out there might not have driven prices lower. But there, folks, that was, last week. That news was reported. Maybe it was last week. Maybe it was on the, looks like probably began here on the 19th of December. However, all you have to do is look at this stock chart. It's got patterns for all of us, all of the coaches, mentors out here at TFNN. I believe that round number high actually was as Basil would call it, a peak G out there. I don't know if that was a rogue wave or not, but it was a peak G in his system out there. And I believe that it was, as I did just the quick alphabetic numbers out there. But they were all Also, a number of other indications here. I'm just taking a look at the divergence that I visually see in the relative strength indicator as it was making new highs. As we pull this thing back here, you got the bearish engulfing candle as it was making a high in April 24th here. You have volume off of the top here, wide price spread, which was on May the 1st. That went from 70.75 down to 51.93 out there, folks. And if you just take a look at this thing here, as far as the retracement of your A to B equals C to your B to C retracement on this thing here, made just about a 50% retracement. Actually, not even a 50% retracement. Just slightly above the 0.382 level here. You can see volume. When it was moving all the way down, as it was really that volume off the top, what was it doing? It was getting right down here in that oversold condition. You can take a look at it. When you get into oversold, you got to digest somehow. What does this thing do? Really just kind of move sideways. You know, if we take a look at this and I pull this back, you take a look. This is nothing more than just kind of sideways consolidation range out here. So it just simply moves sideways. And it goes ahead and it completes, or it's completing the A to B equals CD down. The swing point low is May 15th. That low is 42.15. Volume there is 4.6 million shares as it crosses a B point, which it does on December 19th with 20 million shares. So it crosses it with volume. Of course, if we take a look at why is it bouncing here today? Why is it bouncing, folks? Just take a look at that RSI. You talk about extreme. This thing getting down to a level of 10 out here. So you see a little bit of a bounce here. Don't, folks, don't get in the way of this thing here. Herbalife most likely, and we'll go put this on a weekly chart, or let's put it on a monthly chart here. Right now in the daily chart says 17 bucks is wide open, but let's go take a look at the the monthly chart here on Herbalife. Oh, take a look at that, folks. You know, at least from my standpoint, I haven't really taken a look at this stock chart. I always watch the Herbalife building as I used to fly in and out and in and out and in and out of LAX because their corporate headquarters, I don't know if it's still there, but used to be right there as you were flying in into LAX there. But this thing here on the monthly chart, just look at the month of May 2012. You talk about bearish engulfing candles, bearish signs out there. That's a doozy with volume off the top. You're getting that second leg. As far as where this wants to come back to, if you take a look at this stock chart here, yeah, you could say maybe there's this little line, and I'll call it a little line of resistance as we draw this across horizontal resistance as we draw this across the screen here. But the reality is, looks like Herbalife wants to come all the way back to the $8 range, $6 to $8 range. That is on the monthly chart. Let's go put this on the weekly chart out there. And that's why you tune in to TFNN, I hope, because we give you the information, because the patterns were out there ahead of time, way before what is being reported on in the media out here. Today, this is the weekly candle, and maybe it's going to be a hammer out there, but on the weekly chart, doesn't really show much in the area of resistance other than that same horizontal area that we drew the line across. But I don't see any type of significant volume here to stop it in its tracks, and really looks like it wants to make a 100% move and come all the way back down to that $6, $7 area. That is on Herbalife. Let's go take a look at, we looked at Apple, we looked at Medifast. How about Regeneron Pharmaceuticals? That's off a couple of percent here today, down $4. Let's go take a look at let's see, the ticker symbol here is REGN. Let's go see what that is doing. You know, the markets over in Europe closed today for Boxing Day, I believe, is the holiday out there. And so, going to be quiet week out in Europe for sure. Asia was up last night. We can take a look at some of those international markets, Nikkei, see what it is doing here. Regeneron Pharmaceuticals trading right now into this high volume bar day. This is the December 21st level. So Regeneron Pharmaceuticals, this thing starts closing below 168.15 to 168.73 right now. That will not be a good scene out here. You got a really wide ranging, you don't have a wide-ranging bar. You've got wide price spread, and that is the day of December 21st out here. Looks to me like this is, if it closes below this swing point, that's December 20th, that's 168.15, says that Regeneron will probably want to come all the way back and test out the swing point lows, or at least when it last broke out, which was November 16th, out at 141. So these high-volume bars, you're never sure if it's a buyer or seller that's in here. You find out once it starts breaking anything below that, whether or not the buyer steps in and tries to support that price. That was on Regeneron Pharmaceuticals. We can flip around. Let's go take a look at the international markets. Let's go take a look at, we're just going to take a look at the Nikkei as soon as I can find that here on my screen. So we're taking a look at the Nikkei. The Nikkei here making a 100% move of a move, or trying to. That is getting back up to the highs from March 27, 2012, out at the 10,255 level. If it can, that's an area here also of some tested resistance. So let's go ahead. Let's put this on the screen because you too can do this at home. Take a look at where the Nikkei really kind of fell off of the cliff. That was March 11, 2011. Let's just draw that line across the screen. No doubt that the Nikkei has been strong out here. In fact, I and you should have this on your charts to be taking a look at on a decent pullback out here. Possibility that what we will see the Nikkei here start to give it up as it comes into this area of resistance. That is really the low of the candle from March 14th out there. That low, 95.78. Oh, is that right? Am I at 95? Let's see here. Yeah, 95.78. It's up above that level right now. Just paying really attention to that black line out there. Let's go to San Antonio, Texas, to Chris out there. Chris, thanks for calling. Thanks for holding. How are you?
Doing good, Steve. How are you doing?
I am doing great. How was the holidays for you?
Oh, it was great.
Yeah?
It was great.
Get some good time. Did you have some good time off, or you still have time off?
Yeah, I'm off the rest of the year, so it feels good here.
Oh, that's really great. Very good. How's the weather pattern down there?
Well, actually, this morning was 32 degrees, and that's the coldest it's been the whole year. So. Oh
man, are you native? Are you native of San Antonio?
No, but I'm a native Texan. I'm from West Texas.
Okay, San Antonio. That's a great place. That is a great place. I love it down there. Nothing like that. I used to have a retail store in the mall down in San Antonio. What's the River? What's it called? River Center or something like that?
River City?
Maybe River City. Maybe River City. It's been a while. You wanted to take a look at Chipotle, CMG, out here. Tell us what you're doing and how it can help.
Well, what I was wondering about is, one of Tom's techniques that I like to use a lot is when a stock gaps up or down with big volume, when it comes back and fills it with less, I like to go the other direction.
Absolutely.
And question I want to ask you is, on November the 7th, it got pretty close to filling the gap, but it didn't fill it. Do you consider that filling the gap right there?
November 7th. So each of us have maybe a little bit different interpretation. Some like to see the body of the candle close inside that level. Me, the way that I take a look at gaps is I'm using gaps as support and resistance. So I would be taking a look at the low of that. So I'm going to answer your question because you asked, would Tom or would Steve consider it closing the gap? I'm taking a look at that low, which is 283.11, and what it did on November 7th is it got up to 284.57 and closed back below that area. To me, that is still an open area, an open window, so it hasn't really closed the gap. And what it has done here is it's just simply come in, it's given you an area of resistance out there. And now it was only tested once. You like to see it tested at least 3 times for it to be a strong area of support. And the only reason is because it opens you up to the actual top. It opens you up to the actual gap being filled, which it really was. Now this is my interpretation. This is how I use it from a trading standpoint. It still gave you a signal here from Chipotle on November 7th because it was 1 million shares going into 2 million shares. That was really a nice test out there because it wasn't even going against that gap down. It was going against the area where it broke down. And it's a good, Chris, what you're sharing with the listeners out here is it is one of the most valuable, one of the best places to go ahead and put a trade on, because what we teach folks here mostly, what we talk about are breakouts. And this is the exact opposite. This is just flipping a breakout upside down. This is a breakdown. And so these are areas for you to take a look at in order to go ahead and sell short. As the market got up there, I don't know if you use the RSI indicator, but as the market got up into that level on November 7th, you weren't getting really a confirming signal that it was really into a overbought condition, which is a little bit different than what it is that we have now with Chipotle. As it's getting up in testing the highs up there, you're getting into a little bit of an oversold area. So the real question is, will Chipotle have enough to get up and really test where it really broke down, which is July 20th out there, which is a low of 307.20, or is this area here where the line has been drawn in sand, because there is no volume here on the way up? Are you short it right now, or looking to go short, or?
No, I'm looking to go short.
Yeah. It's a good setup right here. It's a good. What you haven't had though is, and you'd like to have, a bearish engulfing candle. On the 19th, you had a little piercing candle there, but came back on December 21st. Today might give it to you. Might give you another bearish engulfing candle with a close below the 292.03. It's a 291.07 right now. So that would give you a possible signal. So you're seeing enough signals here where it is worth taking a trade. Now, your reward here on your risk to reward is likely right now only going to be these lows of the swing points from like November 28th or maybe the November 15th area. Not that it can't bust through that, but your first target for you in your reward to risk should really be the most recent swing point out there. So I would say your first target is going to be that 257.24 level. If it breaks through that, then it should travel all the way back down and test anywhere in the price range of 252 down to the 233 level out there. So you've got to do your own money management on it. But right now is where your back is up against the wall, and it looks like a short candidate to me.
Okay, one other question.
Yeah.
What is the definition of a bearish engulfing?
So great question out here. Bearish engulfing, number one, it is where the body of the candle truly is the essence of price out there. And when the market is moving up, in this case here, certainly Chipotle moving up off of the lows from October 23rd out here. And if you take a look at the candle session from December the 24th out there, it closed at 294.08. The session today opens at 294.08. So it opens at the same price. Okay, so that's the first place where you're going to start. And what a bearish engulfing is doing, the entire body of today is going to engulf the prior session. So that's why I use the figure of 292.03. And if today's close is below or is at 292.03, the candle today will say that the bears have engulfed that candle. That is it's a great candle. It is, as I rank candles from 0 to 5, because all candles, what candles are, they're reversal signals. And that's really what you're looking for, is a change in psychology. And so when the market's moving up, you're looking to identify changes in psychology. And what's great about the bullish or the bearish engulfing, in this case here, the bearish engulfing, it's really on a scale of 0 to 5, it's a level 3. But what a level 3 candle allows you to do is the market hasn't moved so much away from you in order to be able to take a position, in order for you to be able to have a stop. So bearish engulfing is where the market is moving up and the current candle engulfs at least the prior session. If you engulf more than the prior session, maybe it's a little bit stronger of a candle out there. But that's what a bearish engulfing candle is, and it's a great candle to be able to trade off of. Did I clarify that for you? Because I'm not letting you go until I make sure that I did.
Yeah, I think I understand that now.
Yeah, okay. So great. Candle signals are the coolest, and I will say one of the most leading indicator, what candles allow you to do is they allow you to go ahead and pull that trigger. It doesn't mean the trade is going to work out, but it is now where you're taking a look at other patterns, and it just simply allows you to go ahead and pull that trigger. Oftentimes, people get in maybe a little bit too early. I would rather pay a higher price for more information, and you just got to determine whether or not you like to pay for information. I would rather pay a higher price, in this case here, a lower price, and give up a little bit of profit for information, because if you don't get a bearish engulfing candle, you don't get a reversal signal, says it can still drift higher out there. All right, my friend?
Okay, thanks a lot, Steve.
Okay, enjoy the rest of the year off. Thanks so much for calling. Right now we got the Dow up 3 points, S&P down 2, Composite off 9 points, Russell 2000 down 2 as well. Must be Apple. Apple down $6. We'll get back. We'll go take a look at it, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is down about $1 right now. A relatively flat market out there, and yes, it was River City Mall in River Center Mall in San Antonio San Antonio, great place for sure. Chris was asking about the bearish engulfing candle, and if you think about it in life, folks, from very early ages, we're all taught about signals. Those of you that are driving right now, you couldn't drive without understanding the signals of the stop signs, the stop lights, not just stop signs, but any signs out there, whether it's merging, whether it's red, yellow, green, whatever it is, you couldn't successfully drive without being able to understand the signals out there. And it's this way all throughout life. And, some of you that are flying, thank goodness, people are using signals to land. So signals are all around us. Can you imagine operating your life without understanding the signals? Well, if you're trading and you don't know the signals, this is the basic communication of what the bulls and the bears are doing. And every trading system, I don't care what trading system or set of indicators that you use out there, what you really want to understand is you want to understand where reversals are going to take place using those indicators, whatever the patterns are, whether it's A to B equals CD patterns, whether it's the Chapman wave, whether it's coming into a swing point with lighter volume, and you're looking for confirming signals out there. You want to understand what the bulls and the bears are doing. It is the most basic, most important aspect of trading out there because it is the communication of the bulls and bears. And so you can go purchase a book out there. There's a bunch of there's a number of books out there. I would have to say that Steve Nissen is probably the better of the books out there that you could read. It's just called Japanese Candlestick Charting, so it's a great place to start. The problem is it'll describe to you the candles. It won't teach you how to trade those candles. It won't tell you about the real strength behind those candles. If you're interested in that, go to the homepage at tfnn.com, click on my name, because what I've done is I have consolidated, in essence, decades, and we're talking, 60 decades, because Japanese candlestick charting has been used for somewhere between 600 to 900 years out there, and have condensed it down into a 6-hour session out there. So what I've done is I've peeled back the onion, gotten rid of all of the parts that you don't want to use, and gotten right to the heart of the matter so that you can use those for being able to trade out there. Either learn it on your own or learn it, model somebody else, learn it from someone else that can condense it down for you. But candlestick charting is what you want to be using as your triggers in order to be able to enter your trades here. One of the candles that's out there that you want to be able to understand is you want to make sure that you can identify them properly. We've got the hammer candle here in Apple. Looks like that will be tested, the hammer candle as well as the bullish engulfing candle in the not too distant future here. Apple, that's the November 16th hammer candle. That low is 505.75. That is very, very, very important support area. You get a close below 505.75, folks. You go back and take a look at hammer candles across many charts out there, and if you are long, you just simply are wrong out there. You've got maybe a little bit of support, some junior support that we'll call it, and that is the December 17th bullish engulfing candle out there. That low is 501.23. It's okay for that to be tested, but boy, you get a close below the hammer candle out there, and that spells bad news for Apple. And it spells really bad news for Apple because the retracement that Apple did off of the low, off of the high, which was September 21st, down to the hammer candle, just above a 0.382 retracement. That says lots of energy to the downside. Now, it's got to break that hammer candle in order for it to do it. Otherwise, just simply in a little sideways consolidation, but really just working off that digestive period of that relative strength indicator. So, folks, stay tuned. Basil Chapman will be up next. And then on Wednesdays, as we do each and every Wednesday, Larry Pesavento, 12 to 1, Daryl Martin, 1 to 2, David White, 2 to 3, Ken Shreve, 3 to 4, the Tom O'Brien Show from 4 to 6. Thanks so much for being here, folks. Be safe, and I'll see you tomorrow morning. Take care.